Today I wanted to talk about what's been happening in the markets, both around the Aussie dollar and interest rates. Firstly, on interest rates, bond rates are jumping quite quickly at the moment. Only a few months ago, the Australian 10-year bond rate was at 1%. We're expecting it now to get to 1.9% by the end of the year, and it's moving quickly in that direction. Does that mean that the central bank is going to be raising interest rates? The answer is no. The bond rates are reflecting long-term inflation risks, and they're reflecting the long-term growth recovery that we're going to see around the world, whereas the Reserve Bank is looking at the inflation and wages growth as it is today. And that, of course, is very, very weak. So we still believe that the Reserve Bank will keep rates on hold for 3 years or so. They're still buying government bonds at 0.1%. That's very important because we've also released an important report on the outlook for housing. And while the Reserve Bank keeps interest rates as low as they are at the moment, and we expect that to continue, that's meaning that mortgage rates are holding at record lows. And we expect that to continue for the next couple of years. And really, the Reserve Bank will want, if they need to slow down the housing market, they'll do it via what we call macro-prudential controls rather than raising interest rates. So while markets at the moment are pushing up long-term bond rates, I don't really think that has significant implications for the short end of the yield curve, particularly that 3 and 4 year mortgage rate. The Aussie dollar is also reflecting this strong global growth outlook. We have a target for the Aussie dollar of 85 cents by the first quarter of next year. And of course, we expect it to be around that 79 cents by June. And of course, it's moving very quickly. It's near 79 cents at the moment. So 85 cents is a long way to go, and it's reflecting our view on strong global growth. So the global growth story pushing up bond rates and pushing up the outlook for the Aussie dollar, but not, in my view, putting any pressure on the central bank to be raising interest rates and to increase those critical mortgage rates.